Investors and traders, welcome to the channel Market Chart Pattern. Today's 28th of October 2025. Hope everyone is having a fantastic day. We'll take a look at the key markets and then also key US technology stocks. I do apologize for not being able to make a video for quite some time, but I am a lot more active on Substack and publishing on weekly basis the newsletter in which we are covering the key markets. So I would suggest that you also have a look and subscribe. It's free to Substack. I'll put the link in the description. As always, the video is for educational purposes only, and it is not a financial advice. So S&P 500, it has been marching higher and higher, and the fantastic thing is that it's actually moving towards the targets that we had set up a long time ago. So the long-time subscribers to the channel will know that when the markets were falling apart right here, we came in towards the later part of April and actually declared that we might have seen a low for the 2025, and thus far it has been the case. And that was mainly because we had a pattern completion coming in both in time and price, and whenever the price meets time, the pattern is complete. So we have this big ABCD pattern completed. It's even more fantastic looking on the Nasdaq cash index, which I'll just show you in a moment. So what is happening right now is that we had this long-standing target of 69.50 on the daily chart, and the market is just it's very close to it, and there's a pretty good chance that we could actually hit the exact level on tomorrow. And tomorrow is also the Fed day, so FOMC meeting will take place, and then we'll are likely to see whether the Fed is going to cut rates, which are quite highly anticipated. And the chances are, if that's the case, we could actually hit this level on the S&P 500 cash. So just let's keep on watching this. It's been a very long outstanding target of ours, so a key level to be watching for, it is the 1.618 Fibonacci expansion of this entire decline that we saw earlier in 2025, when it seemed that the bull market was over. It was a very brave call which we did over here. Long-time subscribers will know that. And then I just continued the work on Substack, so I highly recommend that you join Substack. The subscription is free, at least for now. So one thing more I would also suggest is to perhaps, if you're long in some of the stocks or the indices, to tighten up some of these stocks, just because we are reaching some really key levels. So this is what we are watching for in the S&P 500 cash. 69.50 is the exact level that we were watching for. Momentum is really strong. I just want to point out something. The way the market has been moving up is, ever since we had this big day, I think that's when the Trump tweeted or put it on his social media, Truth Social, that 100% tariffs were going up on China because of rare earth stuff. It never really went below this, and we had a key retracement, Fibonacci retracement level, and the market symmetry concept that I always talk about. And that on that day, on the Substack, I actually also posted in the weekly report that the market was actually right at the support when it closed on Friday, and that market just never looked back. So it's moving in gaps. So you can see that gap one, gap two. There's a little bit of maybe there's a little bit of a gap right here. Maybe it'll open with a gap and then just fill the gap, backfill the gap right here. So that's something not very common. So the market isn't moving in gaps. So that's another reason to be careful, because we are coming to the key levels and the market is also moving in gaps. So now let's take a look at this on our weekly, and we have the same level of on the weekly chart, but we also have one more thing around the 6900, where the market is pretty much right now. We have the 1.272 times the AB leg, which is the basically the COVID lows and the 2022 bear market, which set up this BC swing. If we just take AB swing multiplied by 1.272, we get the CD swing, where this market is. So we have a confluence of two things coming together, and that is always something we need to pay very close attention to. So another reason to be very careful right here. And of course the month is not over yet, but it is coming to a conclusion pretty soon, and what we are seeing is that very strong market on a monthly chart. Absolutely no sign of any sort of reversal on the monthly chart. So the momentum is so strong, it's possible that we are also entering the month of November, which usually have bullish tendencies, but we could see some sort of a pullback and then maybe a resumption back into this really strong trend that is in place. Now let's go and have a look at the Nasdaq 100 cash. So that's the NDX, and this one is also, you can see that just moving in gaps. And let me actually try to move this around here. And this one is actually above the target because our target was 25,750 roughly, and this market, look at these gaps, is moving in, and we have actually surpassed this level. So this momentum is so strong in this market. And on the weekly, here we go, I think it's moving towards this 26,650 now, which will be basically the CD leg of this big ABCD pattern, but it'll be the 1.618 times the AB leg. In the S&P 500 cash, we saw 1.272. Here it's 1.618. So pretty strong level to be watching for. Of course, that's our target, but the target could also turn into some sort of a resistance. We'll just be watching very carefully. So there we go. So this is what we are watching in this market, Nasdaq 100. And one thing I wanted to point out was, look at this beautiful ABCD pattern that had taken place back in April. Perfect in time and price, and whenever price meets time, the pattern is complete, and it was just the time for the market to rally, and it's just been rallying. It's just been really amazing to see this kind of a strong market. Now the bull moves do come to an end, so we need to be vigilant. Now let's move down to some of the tech stocks that we'll take a look at. So let's start by taking a look at Apple. Here we go. So this Apple stock has actually been in a bit of a consolidation here, and this is when the April move happened. And this looked like, okay, if this point C was ever broken to the downside, then the bull market in Apple would have been over. But here we came in because we had such critical support coming here, and of course we had this trend line as well. So on the weekly basis, the market never really closed below the trend line as well. So we had a confluence of few things coming together, and now that actually had given us this pivot C, so of the ABCD, and the market has just been rallying fantastically. When Apple just went into this consolidation phase, which I've drawn in this rectangle right here, there was a lot of uncertainty about what is going to happen, but we were watching for our ABCD pattern, and I'm glad to see that it's very close to hit our target of 278, and then we have anywhere between 278 to about 308 where the price could go. So the Apple is looking strong, it is following the pattern, and the bull market in Apple is not over. Now let's take a look at Tesla. Okay, so the Tesla stock, much like Elon Musk, it's a personality stock because it does move about quite a bit based on the kind of tweets it's putting on X, for example. But what we follow here is the patterns, and we have a very clear pattern of this ABCD in the blue, and I think it's likely to get to 532. That's the high as it came, and that was about 488.54 back in December. It was very close to our $500 per share for Tesla. I think this time around it is actually going to break that with 532 and even 618 on the cards. So the patterns are very powerful, and this chart is really for the investors, some really people who are big time believers in Tesla. And the Teslas, of course, the stock has delivered quite a lot of things. So they've got this optimus going on. We could even have 611 on the monthly chart. where the stock could go. And the month is pretty strong here for Tesla. You know, it's on the monthly charts, really long term. On the daily chart, there is quite a lot of noise here. It's a busy looking chart as well. This is where, you know, the market just went sideways. It had a pretty shallow retracement to 0.236 or 23.6% Fibonacci retracement, something not I usually use, but since the markets are trending so strongly, the pullbacks have been shallow. And um, this was our target, 460. The other target is 513 roughly on the daily chart. The market is likely to touch this if it is able to get above the 2nd of October 2025 highs, and market is moving into a bullish kind of seasonality period. So that's another thing to be watchful for. Okay, and now let's take a look at NVDA. This is the weekly chart of NVIDIA. NVIDIA is very strong, and I think we're very strong performance today as well. I think now it's gonna go for $213 per share level, where it'll be completing this big ABCD. Where the CD leg is 1.618 times this AB leg, this red one here, and on the daily chart, just coming down here, you can see that very strong performance today. I don't know what the news was, but it's certainly breaking out. And the really interesting one for us is AMD. So thanks to one of our subscribers who actually pointed the stock to us. We did our analysis. There were a number of these patterns completing right here. This is when we began to get really interested and begin to move on the bullish side when it began to break above the bearish symmetry and the 38.2% Fibonacci retracement. And look, the stock has gone and made new all-time highs. Is up. It's up 240% since this bottom came in, and we caught this bottom. The only problem would have been if you were really cautious, you missed this entry point. Then getting into the stock, it just gave a pretty shallow retracement right here, and off it went. So really strong stock. And on the daily basis, daily chart, here we go, it's just gone above all the kind of measures that I had. But even this CD leg right here, um, but there's a bigger ABCD which is in red. So this stock could actually go to $300 per share. That was not too far away. Now it's only $60, and this stock can move quite a bit. Actually, all these stocks are really moving in gaps, and it's just it's just a fantastic market, right now. Now let's take a look at the stock of Meta. I believe their earnings are coming out. I don't know exactly when. Probably today or this week at least. So this did a double bottom right here. It's been a difficult one because it's just been sideways since August, and this is the deepest pullback we have seen, and the market just repeated again. So this market symmetry, double bottom right here, 805 and possibly 890 or roughly $900 per share level on Meta is possible. If it breaks this double bottom, and then it's coming back and filling this gap right here, so about $600. That's also possible. Okay, now let's take a look at let's take some of yeah, so let's take a look at CrowdStrike. One of the subscribers, they actually brought this to our attention quite a while ago, and we had actually plotted this pattern. So if you're listening, well done if you have actually held through this, because this is what the pattern was calling for, and it's completing this pattern right here, but it's still got a chance. It could perhaps on the weekly chart jump to about 590. But one of the things I would like to point out is, look, this is also a channel. It's not the perfect channel, but it's more like wedge, and whenever the stock got extended to this, look, it had a pullback right into it. So that is another reason to be watchful. We are hitting our level, and plus we have this trend line here as well. It just broke above that, which be careful. If you get a candle like this, then it could actually pull back right towards the bottom of it. That possibility is there, but it's hitting our number to the T, so that's good. And on the daily chart, we have something similar, again 580, but the ABCD pattern also takes it about 620 bucks as well. So this is what we are watching in the CrowdStrike. Let's actually take a look at Amazon. So the Amazon, this stock, this likes to double tops and double bottoms. So the double top is right here. We had a double bottom right here. So stuck in a range. It looks like whenever it has like a deep pullback, which it did in April. The market just catches up with it, and just it's just going nowhere, but still a good stock. I think they have had issues with AWS and stuff, and on the retail side, the tariff stuff with regards to China is maybe hurting them a little bit. Palantir, I haven't followed this stock too much, so cannot talk too much about this. And this is the micro strategy known as strategy now. It's very correlated to the price of Bitcoin. Essentially, it's like a Bitcoin treasury stock now, in my opinion. And here, you can see that it has had it peaked right here back in November of 2024. It's just gone nowhere. And that's of course the ceiling here, and right now maybe it's right towards the 78.6% retracement. It must hold that, otherwise just coming back and testing these lows. And the other thing is that to keep on watching the price of Bitcoin, because I think Michael Saylor's average price is about 70,000, and if it ever dips below that, meaning the Bitcoin, then he goes negative on that. Maybe the market is wary of that. So look, just pure distribution here in my opinion after this massive parabolic move. Okay, and now let's take a look at the next stock. Meta we covered. Microsoft. So the Microsoft is really interesting. I think it had its earnings come out perhaps today or yesterday. I don't know exactly. But what I want to point out is, look, it had completed its big ABCD. This is something that we are seeing in some of the indices as well. And now, so the CD leg is 1.618 of the AB leg, which is basically the COVID lows to the high back in November of 2021 in this case, and it had a pullback which is just equal in magnitude to the 2022 entire bear market, but it just happened much quicker. Here, this just stock has just gone sideways after this massive parabolic move. So I don't think this stock is going much higher unless it breaks above this 570 level, which it hasn't done for a while now, quite a few weeks actually. Now let's take a look at Avgo. So it's doing fantastically, and I think it's got a chance to actually go and hit this 400 level. Netflix, yeah, so the Netflix is interesting because it has had a pretty steep pullback last week, but it's also approaching certain key support levels, as in the highlighted area around 1050. It must hold that, otherwise it will pull back quite a bit, and this trend line, if it's broken, yeah, it could come down right to 820. Okay, now let's take a look at Baba. So the Baba is really interesting because we had this target of about $160 per share level for a long time. Finally, the market was able to get there, but even beyond that, and now I think I'm just gonna be really cautious of it, and just personally I'll just remain on the sidelines with this. Google, it has done really, really well. It was one of the least favorite stocks, personally speaking. But look, this is where it, just like Microsoft, it did the same thing, but even in a much better way, because it just went exactly to the market symmetry. This is where we were starting to pay attention to it. It's just gone parabolic. So Google has done pretty well as well. CrowdStrike we discussed, and Home Depot. So the Home Depot is an interesting one. I've been watching this on the daily chart. I think we have it's moving in this channel formation. I think we've got a really good support at around 375. If the market breaks that, then the stock might be doing an A, B, C, D to the downside, bringing it down to about 345. This level around here, so need to be careful with this one. And JP Morgan done pretty well. Goldman Sachs also. Let's take a look at Goldman Sachs, but on the weekly. Here we go. So there we go. It also completed this big ABCD. Had a little bit of expansion here. Completed double ABCDs. This red one as well, and I think it's more likely to be sideways. However, tomorrow, if the Fed decides to cut rates, I think we're going to see some rally in the financials. So yeah, it's completing these patterns as well. But if the market keeps on extending, then these levels are also likely getting extended. Okay, and yeah, this eBay stock is really interesting, especially on the daily chart. It had this nice pullback, didn't exactly come to the 38.2% retracement. I was looking to buy right here, even had my alert set, but I missed it. I missed it by about, wow, what was the low right here? Um, 86.35, and I was 85.65, so I just missed it by you know by by a dollar or something. But anyway, I had a second chance and I missed that as well, so I missed this entire move. But I was watching it. Now I think what it's doing is it could be in a triangle pattern like this, which means it's just a trading range, and it could pull back again. So it might be just a trading range affair. Now let's take a look at. Um, Spotify. So the Spotify on the daily chart here. I was looking at it, but it just broke below the 38.2% retracement. It's being held by 200-day moving average. If it breaks below that, it's coming to 61.8% retracement. But then we have to be careful because it might be doing, a pattern like this, where we have this A, B, C, D. Let me clone this. Yeah, so yeah, we'll have to pay attention to it when it gets there because we'll have an ABCD plus 61.8% retracement. MDT, that's an interesting one because moving in a channel like this, it's in the healthcare. Did a double bottom right here, but if the bottom breaks, it's coming back right here. So it needs to get above the channel, get above the 20-day moving average to be able to make a rally towards um, the top part of the channel. A bit disappointing stock, to be honest, in terms of price action. So the Caterpillar, it's just pulled back right here. Um, Very strong in terms of the momentum right here, but I think it's just going through consolidation now. Yeah, so this one is interesting because this is Seagate. It has had a fantastic run right here. You can see that very, very nice. Peaked early October, and then we had a recovery high pretty much to the 61.8% retracement, and now it just pulled back into this support right here, filled in the gap. Um, Earnings came out today. It's rallying after hours. Um, so two things could be happening. Either it completed its move. This is the deepest pullback we have seen since this move in April. So either it completed and it's about to rally and make new highs, or it is actually doing its first major ABCD correction, which could see the stock come down right to the 38.2% retracement, which will be an interesting level to watch for this one. And a similar story with the Western Digital. I don't know why it's taking such a long time. Here we go. Similar story with Western Digital, but the Western Digital is looking a little bit more strong. Very strong support came in on this initial pullback and then just broke out of this dynamite triangle. Had a very nice rally intraday last Friday, and then the next Monday gave all those gains back, and then filled the gap as well, testing the lows right here. So let's see if it's able to sustain above the dynamic triangle, dynamite triangle tomorrow. then I think it's got a chance to maybe start the leg higher. Very similar to the Seagate stock. But I think Western Digital is looking a little bit stronger. So these are the key stocks that we are watching. Let me actually take a look at Zscaler. Here we go. So the Zscaler, wow. So it's done fantastic. Um, there you go. It just right from our key level pulled back. I think pulled back right into the 38.2% retracement. There you go. And I think this stock wants to make another higher. It was very difficult when it pulled back right here to be actually to, or even right here when we were watching it for a very long time. Was very messy stock, going a lot of volatility up and down, and there was a chance that this might be an ABCD taking it down, but this stock recovered. We're very pleased with our analysis because we caught it. So thank you very much for watching the video. Good luck, good trading, and if you want to regularly get the updates, then please do subscribe to the Substack. It's a free newsletter, and even intraday I'm posting notes there, so you're able to get some of the charts, my thoughts and stuff like that, and also some other fantastic updates with regards to statistics that I'm putting out. Really informative. I'll put the link in the description. Thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.